Yes, guys. So we were discussing about non-current assets held for sale under IND AS 105. We did discuss about the criteria for when a particular asset, which is a non-current asset, gets classified into a non-current asset held for sale as per IND AS 105. What were the two primary criteria? Number one, the asset should be held for sale immediately in present condition. And number two, the sale is highly probable. We've also seen certain conditions along with. Now from here, I will take along with the measurement. What do you mean by a disposal group and how is it different from an individual asset? And then we'll move into discontinued operation as well. So let us take it step by step. The first one, we'll talk about measurement. We have seen in multiple instances where an asset or a non-current asset is basically classified under IND AS 105. Now, once they start getting classified under IND AS 105 as non-current asset held for sale, you will have a different measurement criteria on each balance sheet date. You cannot apply the same cost approach or revaluation approach as we have seen under IND AS 16 or 38 or 40. So what is the different approach that we have to adopt whenever an asset, a non-current asset, gets classified as held for sale under IND AS 105? So let's bring that down. Put a heading as measurement. What measurement am I talking about? The measurement of a non-current asset when it gets classified under IND AS 105. Measurement of a non-current asset when it is classified as held for sale under IND AS 105. Now, whenever you have a classification as of a non-current asset as held for sale, the measurement should go something like this. Immediately at the point when you classified it, no further depreciation shall be charged on such non-current assets after classification. Once you classify it under IND AS 105, then there is no further depreciation which is charged. So you will stop charging depreciation on that particular asset, be it a PPE or an intangible asset or a investment property. No further depreciation. Then if there is no further depreciation, how do I measure these items? They should be measured at lower of, what is it lower of? Lower of, number one, carrying value of the asset, and part B, their fair value less cost of disposal measured at carrying value of the asset or fair value less cost of disposal, whichever is lower. Now, whenever I talk about this word fair value, immediately I'll have to bring into the standard IND AS 113. My fair value of any non-current asset has to be measured as per IND AS 113 standard, which talks about fair value measurement. The framework which is laid under IND AS 113 becomes the primary way or primary basis on which we measure the fair value. So fair value less cost of disposal or carrying value of the asset, whichever is lower, should be the basis on which I'll start measuring the asset as per IND AS 105. Here, now moving forward. When I talk about this kind of valuation, let's say, for example, let's say your fair value minus cost of disposal is less than carrying value of asset. Let's say your fair value less cost of disposal is less than the carrying value of the asset. In such case, there is a decrease in the value of the asset, and such fall in the value of the asset should be charged to your P&L. Friends, is charged to P&L. Okay, so whenever we are measuring at lower of carrying value or fair value, if your carrying value is less than fair value, then obviously you are measuring it at carrying value. There is no difference which is arising. But if in case your fair value less cost of disposal is less than the carrying value of the asset, in such cases, the difference between the fair value and the carrying value, or the write down in the value of the asset to fair value less cost of disposal, should be straightforward charged off to P&L. Now, obviously, in the case it is the other way situation, then there is no difference which arises at all. If you want, I'll just write that statement as well. If your carrying value of asset is less than the fair value less cost of disposal, in such situation, there is no difference to be recognized, because I will measure it at carrying value itself, and obviously there is no difference which will be recognized in the value of the asset. And remember, this valuation which you have applied, measured at lower of cost or fair value or less cost of disposal, whichever is lower, this measurement will apply not just on the date of classification, but also even on the balance sheet date. On each balance sheet date, such assets should be continued to be measured at lower of carrying value or fair value less cost of disposal. Clear? So you will continue to keep on measuring even on balance sheet date at carrying value and lower of fair value or carrying value, whichever is less, for a non-current asset even on the balance sheet date. Now someone might click in their head, you said that the disposal should be completed within 12 months. So why does the balance sheet date even arise? See, 12 months I said, but unfortunately, if let's say the classification into non-current asset held for sale happened on, let's say on 1st of February. So you can complete the disposal before 31st of Jan next year. There is a 31st March balance sheet date in between. So every balance sheet date, I'll apply the same measurement formula and identify what should be the value at which the asset should be presented in my financial statements. Clear? Now, you said at the time of classification, if your fair value is less than the carrying value, then I will transfer the difference to your P&L. What if subsequently on balance sheet date, there is again a fall in the fair value, or if subsequently on balance sheet date, there is an increase in the fair value? Fall in fair value on balance sheet date. Or what if there is an increase in fair value on balance sheet date? If there's a fall in fair value on balance sheet date, then in such situation, the difference between carrying value and fair value and fair value should be charged to P&L. The difference between carrying value and fair value should be charged to P&L whenever there is a fall in the fair value as on the balance sheet date. But let's say subsequently, the fair value of the asset has increased on balance sheet date. In such cases, credit P&L. Earlier you debited P&L. Now you credit P&L to the extent it was debited earlier. To the extent it was debited earlier. Balance, if any, ignore. Now what am I talking about? Let's take an example and understand the situation, what I was talking about till now. Let's say I have an example and this was a property, plant and equipment, PPE, classified as held for sale. On 1st February 2021. On that day, let's say the carrying value of the asset was 100 and the fair value less cost of disposal was about 90. In such situation, upon classification under IND AS 105, I'll have to measure the asset at lower of carrying value or fair value. Therefore, the asset should now be measured at 90 rupees. That means the asset should be written down by 10 rupees. So this difference which I am arising should be charged to P&L. However, let's say subsequently on balance sheet date, March 21. Let's say now the fair value less cost of disposal has increased. Fair value minus cost of disposal has increased. What is the amount of increase? Let's say it has increased to 96. Let's say it has increased to 96. Then that 6 rupees should be credited to P&L. Further, on the next balance sheet date, let's say the disposal was not complete within 12 months. Enterprise was still committed to the plan. So therefore, you can still continue to show it under non-current asset held for sale. I am assuming that the disposal did not happen. On that day, the fair value minus cost of disposal has further increased. Now the increase became 101. If now the increase became 101, can I credit the entire 6 rupees to P&L, entire 5 rupees to P&L? The 5 should be credited to P&L. Should I give this treatment or not? Is it appropriate to provide this treatment or not? Answer is wrong. The amount which should be credited to P&L is only 4 rupees. Why is that so? Because at the first time on classification, you only charge to P&L 10 rupees. Subsequently, how much did I charge? How much did I credit to P&L? 6 rupees. So therefore, the net debit to P&L was only 4, which can be credited to P&L now. But the increase in the value of the asset was actually 5 rupees. So that's why I say that 1 rupee of increase is ignored. Increase of 1 rupee is ignored. Here, so this is what we discussed as far as your measurement is concerned. I said, upon classification of a non-current asset as held for sale under Ind AS 105, no further depreciation shall be charged on that asset, either if it was an Ind AS 16 PPE or an Ind AS 38 intangible or an Ind AS 40 investment property. No depreciation or amortization shall be charged further. On the date of reclassification, the asset should be measured at lower of carrying value and fair value less cost of disposal. If your carrying value is less than the fair value, then there is no differences which arise, so you can ignore it. But if in case your fair value less cost of disposal is less than the carrying value of the asset, in such cases, the difference which arises should be credited to P&L, should be charged to P&L or debited to P&L. Subsequently, I'll have to measure it on each balance sheet date using the same measurement formula of lower of carrying value or fair value less cost of disposal. If the fair value subsequently declines even further, then the difference between the carrying value and fair value should be charged to P&L. But if in case the fair value of the asset increases, then I will credit the P&L with the amount of difference only to the extent it was debited earlier. Any balance, if any, or further increase, if any, I will ignore. To help you understand this, I have given you a particular example. That example clearly lays down these principles of what we have just discussed. Remember, this is measurement. At the same way how I have with measurement, there also has a change in presentation. These assets, which were earlier classified under non-current assets either as Ind AS 16 or 38 or 40, today, subsequently after being classified as non-current assets held for sale under Ind AS 105, these assets are no longer continuing to be a part of either the PPE or the intangible asset or investment property. Now it is no longer a non-current asset. It should be classified as current asset because you are expecting to realize the money within 12 months. Presented under the head of non-current assets held for sale under current assets. It should be presented under the head of non-current assets held for sale under the heading of current assets. Here, so this is presentation, and this is how the presentation should happen as far as your financials are concerned. Clear? Now, so what are you doing? You are reclassifying from non-current asset, which is there in the balance sheet. From the non-current asset, I am moving it down into your current assets, and they are presented under a separate heading of non-current assets held for sale. This is a significant difference as far as the measurement is concerned, and also a significant difference as far as the presentation is concerned. So that is the reason why we require this new standard Ind AS 105 to basically lay down the principles of measurement. Here, so now that you have understood this part of non-current asset held for sale and how is it measured and how is it presented in the balance sheet after it gets classified into Ind AS 105, let's try to concentrate on certain other parts. Along with this, let's say a management has decided, to dispose the asset after the balance sheet date, but before the date on which the financial statements were approved by the board of directors. Board of directors approve it, shareholders adopt it. Correct? So before the board of directors have approved the financial statements, during this period, which is covered under Ind AS 10, events occurring after balance sheet date. During this period, let's say, a management has decided to make a decision for disposal of a particular asset. Should it be considered as an adjusting item? Should it require a remeasurement and reclassification as far as the balance sheet on 31st March is concerned? Is the question. So I am talking about a very simple logic. Events occurring after balance sheet date. Whenever we come to this concept of events occurring after balance sheet date, let's go like this. Let's say my current financial year was commencing on 1st April 2021, was ending on 31st of March 2022. Okay. This was particularly my balance sheet date. However, let's say the board of directors have approved the financial statements only on 30th of June. approval of financial statements by board of directors, calling it as BOD. Sometime after the balance sheet date and before the approval by board of directors, I have an event somewhere in between, and this event was the decision for disposal of a non-current asset. This should be governed by IND AS 10. Events occurring after balance sheet date should be covered under IND AS 10. If you remember, this was also comparable to AS 4, which was also talking about your events occurring after balance sheet date. Now, in such case of AS 4, we had the concept of adjusting item and non-adjusting item. My question is very simple. Is this particular decision of disposal of a non-current asset, is it an adjusting item or a non-adjusting item on 31st March? Guys, these items are non-adjusting in nature. They should be considered as non-adjusting events. They should be considered as non-adjusting events. Therefore, I will not change its measurement and presentation on balance sheet date. Or no change in measurement and presentation on balance sheet date. What is the balance sheet date here? 31st of March 2022. I will not change its presentation. It will still be continued as a non-current asset. No change in the measurement. That means I'll still show it under cost approach or revaluation approach itself. Clear? However, it does require a disclosure. Such decisions require disclosure in notes to accounts. Such decisions require a disclosure in your notes to accounts. Clear? So they should be considered as non-adjusting items. Since they have occurred after the balance sheet date, no condition was existing on the balance sheet date for these items. No change in measurement and recognition as on 31st March. Do not change whatever measurement and presentation that you have already done. However, it does require a disclosure of such decisions in your notes to accounts. This is whenever you have taken the decision of disposing a particular asset after the balance sheet date, but before the date of approval of financial statements by the board of directors. This is to be governed under IND AS 10. However, since the relevant aspect has come in, I made sure that I'm giving you the relevant aspects of it. Clear? Now that we have understood the presentation, we have understood the measurement of an asset under IND AS 105, once an asset gets classified into the standard, so now we'll have to start looking at the other aspect of the standard, which was talking about something peculiar. it was talking about something called as disposal group. Correct? What do you mean by disposal group? A disposal group means, by the name itself, I think you can get it. The name itself suggests that a disposal group is group of assets and liabilities which are intended to be disposed of in a single transaction by the management. The management intends to dispose these assets in a single transaction. That is what is called as a disposal group. They are group of assets which the management intends to dispose in a single transaction. That means what? You are trying to make sure that you are not disposing individual assets, but all assets together in one shot. I want to dispose it off. This situation is called as disposal group. Assets are a part of disposal group, I agree. Can a liability be a part of disposal group? Yes. If I have a liability which is directly attributed to an asset within the disposal group, then even the liability can be attributed to it. Let's say I have machine A, B and C together which are expected to be sold in a single transaction. I call these three assets put together as a disposal group. For suppose the machine A was acquired using a bank loan. Such amount of bank loan, if I intend, since it is directly related to machine A, if I intend to dispose it along with the group of assets, then I can attribute even the liability also to your disposal group. There is no change as far as the measurement is concerned. I will still measure even the disposal group at lower of cost or fair value less cost of disposal. Lower of carrying value or fair value less cost of disposal, the measurement will still remain the same. However, if your fair value less cost of disposal is less than the carrying value of all assets put together, which are together in the disposal group, in such case, the decline in the value should be attributed to each asset in the disposal group in the proportion of their carrying value. Let's say the carrying value of machine A is 80, machine B is 60, machine C is 40. So 80, 60, 40, the total carrying value of ABC put together is 170. Let's say, for example, I expect fair value less cost of disposal of the entire disposal group put together is only 150. So therefore, since your fair value less cost of disposal is less than the carrying value, I'll have to write down the assets by 20 rupees by debiting this 20 rupees to your P&L. Now when I credit the 20 rupees to your asset, which asset? Should I credit it to A? Should I credit it to B? Or should I credit it to C? It will be credited to all the three assets A, B and C in the ratio of their carrying value. It should be attributed to A, B and C in the ratio of their carrying value. Let me write down. Disposal group. What do you mean by a disposal group? A disposal group is a combination or a group of assets and liabilities. A group of assets which are expected to be disposed by the enterprise in a single transaction. You are expecting to dispose the entire group of assets in a single transaction, then that group of assets is called as disposal group. I've taken a decision to dispose this group of assets in a single transaction. Can a liability be attributable to disposal group? Yes. A liability can form part of a disposal group, can form part of a disposal group if, only if, it is directly attributable to an asset in the disposal group and is intended to be transferred along with the disposal group. So I'm saying a liability can definitely be a part of the disposal group if it can be directly attributed to an asset within the disposal group and such a liability is intended to be transferred along with the disposal group. Then you can basically make sure that it is forming part of a disposal group and even a liability can be attributed to that disposal group. Whenever you have this point of disposal group which comes up, you will apply the same recognition and presentation criteria. There is no difference. Measurement and presentation is very similar to earlier. Similar to individual assets. There is no difference. In such case, when the measurement and presentation is similar to the individual assets, in such case, you'll have to, if it is forming part of a disposal group, I'll go with the case like this. It shall be lower of number 1, sum of all carrying value of assets this is summation symbol less the carrying value of liability. If it is attributable to the disposal group, then even the liability should be reduced from the carrying value of the assets. And number 2, what I should be comparing it? Fair value of disposal group when all the assets are disposed in a single transaction minus cost of disposal. Measurement and presentation, it should be lower of all the carrying value of the assets put together minus the carrying value of a liability, or the fair value of the disposal group reduced by its cost of disposal. So this is my measurement and presentation, which is very similar to the individual assets that we have seen. But if the fair value is lower, is less than carrying value. In such case, the difference should be written off from all assets of the disposal group in the proportion of their carrying value. Friends, should be written off from each asset in disposal group in proportion of their carrying value. Whenever the fair value is less than carrying value, then the difference should be written off from each asset in disposal group in proportion of their carrying value. So whenever we are talking about this, so this particular statement is basically called as impairment. When this situation comes up, it is impairment, and it is very similar to what our discussion will be under IND AS 30. Lot of discussion, guys. What I'm talking about here is just a brief outlook of what is fair value, how do I measure it and all that. But remember, when I talk about impairment under IND AS 36, it is a much larger ambit, and we'll have a longer discussion as far as impairment is concerned. We will also introduce the aspect of goodwill, which is also there under IND AS 105, but I'm parking it aside so that I'll enable you to understand it as a part of impairment under IND AS 36. If I include it under IND AS 105, then probably I'll have to repeat it again under IND AS 36. So I don't want to do that. I'll make sure that the goodwill allocation to the assets or the disposal group, I will discuss as a part of IND AS 36. So whatever we have discussed so far as far as disposal group, we will see it in very similar discussion in IND AS 36. Very similar discussion we'll have. What is a group of asset? But the only difference is here you are calling it as a disposal group. Under IND AS 36, you will call it as CGU, cash generating unit. The name might change, but ultimately it is still the same. In a sense, it is still the same. It is group of assets which are intended to be disposed of in a single transaction. Measurement principle will still remain the same, and this impairment should be written off from each asset in the disposal group in the proportion of their carrying value if your fair value less cost of disposal is less than the carrying value of the asset. Here. Now, we can always come across a situation. We can always come across a situation where the management intended to actually dispose the asset, but before the disposal actually happened, there is a significant change in the management decision and they have withdrawn from the plan of disposal. Question number 1. Is it possible for the management to withdraw from its plan of disposal? When it is the management's idea to put it under disposal, it can definitely be a management idea to withdraw from the plan of disposal as well. It was their plan to dispose and they are withdrawing from the plan of disposal, very much possible. Whenever we are looking at such kind of a change, a significant change in the plan for disposal, or let's say it is called as withdrawal of plan of disposal, in such case, how do I measure these assets which were already classified under IND AS 105? This asset was earlier classified to IND AS 105 when the management expressed its intention to dispose the asset. However, subsequently the management withdrew its plan of disposal. Now in this withdrawal, how should I present the asset? How should I measure the asset on the date of withdrawal from the plan of disposal? This will be our next discussion. I'm talking about withdrawal from disposal plan. Initially, the management intended to dispose the asset. Subsequently, they want to withdraw from the plan of disposal. Is it possible? Yes, very much possible. So, whenever the management expresses its intention or withdraws its intention to dispose the asset, then the measurement of the asset on the date of withdrawal should be very, very critical. Should be very, very critical. On the date of withdrawal, from plan of disposal, by the management, when the management has withdrawn from its plan of disposal, then on that date, the asset should be reclassified. Earlier it was classified from IND AS 16, 38 or 40 to 105. Now I am reclassifying it to IND AS 16, 38 or 40. And measured at, how should they be measured? They should be measured at lower of, again lower of, again the statement is coming. Second, classified and measured at, reclassified to either IND AS 36, 38 or 40 and measured at lower of part 1. Carrying value of asset on date of classification IND AS 105 minus depreciation or amortization up to the date of withdrawal on the asset if it was not classified. If it was not classified under IND AS 105 earlier, I will talk about what is the lower of second part also, but first part understand carefully. The carrying value of the asset on the date of classification to IND AS 105. Up to that date, I charge depreciation. But subsequent to that date, after it got classified into IND AS 105, the depreciation or amortization on the asset should cease. No longer you are charging depreciation and amortization on that particular asset. Correct? But when you are withdrawing from the plan of disposal, I will try to reduce the carrying value on the date of classification to IND AS 105 with the amount of depreciation that would have been charged. I did not charge. But if it was not classified to IND AS 105, the amount of depreciation that would have been charged to the asset should be reduced from the carrying value. So that's why he said depreciation up to the date of withdrawal on the asset if it was not classified to Ind AS 105 earlier. That means if it was still under Ind AS 16 or 38 or 40, then the amount of depreciation that I would have charged on such asset should be reduced from the carrying value of the asset as on the date of classification to Ind AS 105. In simple essence, what? If the asset was not classified to 105 earlier, what would have been the carrying value of the asset on today's date? If it was not classified to Ind AS 105 earlier, then definitely I would have continued to charge the depreciation. Correct? Definitely I would have continued to charge depreciation on that asset. So, by continuing to charge the depreciation on the asset up to the date of withdrawal, what would have been the carrying value of the asset had it not been classified as Ind AS 105 earlier? That amount or lower of part 2 recoverable value of asset on date of withdrawal from disposal plan. On the day when you plan to withdraw from the disposal plan, what was its recoverable amount? Now, this recoverable amount we did see in certain illustration, and I told you this recoverable value of an asset should be measured under Ind AS 1. Measured as per Ind AS 36. Under impairment, we will discuss about how to measure recoverable amount. If you want to know now, then it is higher of value in use or fair value less cost of disposal. Okay, if I have to give you and you want to know what recoverable value is, then it is higher of point number 1. Value in use. In the standard, we'll use the word VIU or net selling price. Till now, we have only come across the word lower of. Now I am coming across a word called as higher of these two values. So that should be the measurement whenever you withdraw from the plan of disposal, and on that date, I will try to identify what is the carrying value of the asset if it was never classified under Ind AS 105 earlier. If it was not classified under Ind AS 105, I would have continued to charge depreciation. Therefore, the carrying value of the asset on the date of classification to Ind AS 105 minus the depreciation from the date of classification up to the date of withdrawal on the asset if the asset was never classified as Ind AS 105 earlier. That should be the carrying value of the asset on the date of withdrawal if it was never classified as Ind AS 105 earlier, and the recoverable value of the asset on the date of withdrawal from disposal plan, lower of these two, should be the value at which I will measure the asset whenever I withdraw from the plan of disposal. Whenever I withdraw from the plan of disposal, this will be my measurement. Clear? Now guys, if you observe, we had a significant amount of discussion as far as what is a measurement, what is the measurement on the date when you classify it as Ind AS 105, what is the measurement on each balance sheet date, what is the effect or the recognition of increase or decrease in fair value of the asset. We have also come across the situation where we are talking about disposal group and also withdrawal from the plan of disposal. And that will sum up the first part of discussion under the standard, that is regarding non-current asset held for sale. Now that will sum up the entire discussion on the first part, that is non-current asset held for sale. Now that we are done with non-current asset held for sale, you need to remember the entire standard, Ind AS 105, not just spoke about non-current asset held for sale, but it also includes a discussion on discontinued operation. What is a discontinued operation? How is it different from AS 24, which was discontinuing operation? How do you define a discontinued operation? What is its impact on presentation of financial statement? No measurement, nothing. It is only about measurement we have already seen here. So here only under discontinued operation, we'll talk about presentations and disclosures necessary whenever there is a discontinued operation in an enterprise. And after we finish discontinued operation, that will be the end of this time. Yeah.